Hello, good afternoon. Um, in this video, I'll try to answer a question of the week. So the question is, what is the most conservative way to invest? So, conservative way to invest. Okay? So, what do you mean by conservative? It means when you buy something, it doesn't go quick, like up or down, okay? So it takes a very long time. So people, they use this way, this conservative way, in order not to lose a lot of money, but they like to have money gradually through years. Okay, so the most conservative way is to invest in indexes. Now, index, so what does mean index? Index is just a benchmark of some stocks. Okay, so I will give you just an example. The Dow Jones, okay, which has like 30 stocks, or you can use what is it? The other one. Let me think about it. Okay, let us just give you an example. Now, 30 stocks is, there are a lot of sectors here, a lot of industries, a lot of things, and this 30 stocks gives you a general idea about the whole market. Okay. So some people, they just what we call buy the market. Buy the market. So here, when you buy the market, you don't have to put like a stop loss. No stop loss. Why? Because you are going for the long run. Okay? You are going for the long run. I will explain to you what does it mean. It means you are not investing for 1 year. You are investing for the whole life. Okay? So, for example, if you take Dow Jones, I give you just an example. For example, you buy here. Suppose that this is 1 year. 1 year. Okay? Now, next year is here. Next year is here. The other year it goes down here, okay, and then it goes, for example, here. Next year here, okay. So you don't see. You try to see your investment year by year, but in general, you try to see from day one to now, okay, and you divide through years. For example, you have 1, 2, 3, 4, 5 years. Okay? So you divide the outcome of 5 days, 5 years, and then you see your investment. Okay? Sometimes you have a bad year, but most of the years are good. Okay? So this is what we call a conservative way. It's a way that you don't see, it's not. You should see the average of all the years when you add them. You add first year, second year, third year, fourth year, and fifth year. You add them all and you divide by 5, and then you find the average. For example, you find, this is how do they measure. For example, you find 12%. Okay? Suppose the first year, you get, for example, 20%. Okay? Second year, you get, for example, 15%. Third year, you go down. You lose, for example, you lose 10%. So you don't worry about this 10%. Okay? Because you have 20 here, you have 15 here, and then you have 1 year which is bad year, or 2 years or 3 years. But the market will go up. Now, why do we say conservative way? This is the thing. When you buy the whole market or the whole sector, you are sure that the stock market goes up, down, goes up, down, goes up. But most of the time, when you see the history, you find that your investment is always going up. It's here. So you see, although it's not that big, but it's good. It's steady. And this what the people who have too much money, what they do. Okay, they put in conservative way. Now, this is the whole market. I'm not speaking about Dow Jones. You can see the SP, Standard & Poor. You can see there are a lot of indexes. Either you go by index, okay, or you can go by mutual fund, or you go by ETFs. Okay. Now, you just some mutual funds they just have some stocks, a lot of stocks together, and they are diversified. And you see that mutual funds, the ETFs or the indexes, they go most of the time, they go up. Most of the time. Okay? Now, this is in general. Now, take an example of a stock. So why the stock is not a conservative way? It is not a stock. Most of the time, it is not. Okay? Most of the stocks are not, if you want to invest, they are not a conservative way. Why? Because some stocks, for example, you have 50, now you find it $1. For example, in 10 years. So, do you like to invest in one stock, and you see that your investment is going from 50 to 1, and you say, let it, year by year, until you see all your money is gone. Okay? Why? Because one stock is risky. We have too much risk. Okay? Now, if you have too much risk, either you have good reward or you have a big loss. Okay, like this one, 50 to 1, you have a big loss. For example, 10 years, 15 years, and you see your investments going down, and you keep it. So, because the stock, sometimes the stock or the company is losing money, and it continues losing money until the company is going bankrupt. But can all the market go bankrupt? No. You can have bad years, good years, but you will have never bankruptcy for the whole market. You can have a crisis, but the crisis you will get good years after it. Okay, so the whole market is a conservative way. If you choose only one stock, you are putting too much risk for your investment. But if your stock is going up, for example, and you know the company very well. For example, you work for a company and you know well that this stock is going up very good. For example, it begins with $10. Now it's $200. Here, you only buy one, you risk too much money, but you get a very good reward. Okay? So you should stay until things will go down and you become to lose your money. But this is risky. Okay, I'm telling you right now, it is risky. That's why the people who are rich, the people who are wealthy, they use conservative way, and they use what we call compounding. Okay, because some of these conservative ways, you have dividend plus capital gain. Okay, dividend, it means they give you some profit of those companies. Okay, they give you some profit, and capital gain when the stock goes up. Okay, so hope you understand this conservative way to invest. So if you are interested, you go to mutual funds, ETFs, and you go to invest in indexes. Okay, or you invest in some sectors that you like and it's going up for a long time, and you just invest and you put your money there and you sleep, because it's a conservative way and it takes the whole life. Okay, some people put their money the whole life. Thank you very much for watching. If you have any questions, just ask.